It's going on, everyone. About 54% of stocks in the S&P 500 closed up in the green today. And some of you might not even believe this, but the S&P 500 actually broke brand new all-time highs this morning, but Bears stepped in and defended that level pretty hard and pushed the market right back down. I hope you're ready for an exciting day in the stock market tomorrow, as the big event is now here. Not only are we set to see an interest rate cut tomorrow, which is the first time since March of 2020, but this specific interest rate cut is actually set to be the most uncertain FOMC meeting on record. So in today's video, we're going to talk about all of that means, the most important stock setups and levels to pay attention to tomorrow, and we're going to cover a lot of interesting setups to keep close on your radar throughout the rest of the week. We have a very exciting schedule for tomorrow, so I hope you guys are ready. And besides that, Tom, let's jump right into it.
Yeah, Mike, the SPY, that was pretty awesome today. The way it ran up towards new highs, I was like, wow, are we going to get a real breakout coming in here? And I guess I could call this a little breakout, Mike. You know, I would say that there was some playable momentum there, but I'll be honest, the scalping opportunities were pretty far and few between there as it broke out. But I'll tell you what, that move back to the downside ended up being pretty prevalent. And Mike, you know, we're in that time of the year now that it's the worst time of the year for the market. And of course, we're going to talk about the FOMC meeting and everything like that in just a couple minutes. But we just actually went through the worst day of the year since 1950, at least, which was actually September 16th. Looks like September 19th is also one of the worst days historically, being down 1.1% on average. But I don't know, Mike, you know, this next 5 days that we're in are some of the worst 5 days of the entire year. And it says, well, obviously here, worst 10 days, of course.
Yeah, so for those of you who don't know, September is actually the worst month of the year for the stock market on average. But as we've seen so far, at least for this September, it has been holding up in a pretty strong way. But going forward, what's worth really keeping in mind is that while September is the worst performing month on average for the stock market, it's really that second half of the month that is especially bad. And that's what we're heading into right now. So the market is, holding up in a strong way. But again, we want to show this data so everyone can, be prepared for it ahead of time. And while, historical stats like this are important and they're definitely worth keeping in mind, what's ultimately more important are like the, recent events and, news and sentiment that is currently happening. And that is exactly what we're going to transition into right now, which is the FOMC interest rate decision for tomorrow. So basically tomorrow at 2 p.m. Eastern time, we are set to get the FOMC interest rate decision, which is when we'll finally know by how much the Federal Reserve is set to cut interest rates by. What's worth keeping in mind is that this is actually the most uncertain FOMC interest rate decision on record. Basically, we are at a point where when we look at the, I guess you could say, CME probability tool, the market is not very certain. And you could see by looking just at the chart we have on the screen right now that we are as close to the 50% mark at any time on record. And this is not necessarily a great sign because as we could see at a lot of other, past FOMC interest rate events, the market basically knew what was going to happen. Like when you have a probability of, let's say, a 25 basis point rate cut all the way down at, let's say, 10% or even lower, it's not going to happen. But when we get to this area where we're like this close to 50%, it brings in a lot of uncertainty into the market as a whole because everyone looks at these probabilities to, place their trades and, structure their portfolios. And what's worth keeping in mind is that, FOMC interest rate events are extremely important, not only for short-term trading, but also the stock market as a whole and then just the economy as a whole, because interest rates affect literally everything in the economy, from stock valuations to mortgage rates to auto loan rates to absolutely everything. So we are set for an important day tomorrow.
Yeah, we are. Powell better get us up through this big resistance, Mike. The SPY is stuck here, so I'm hoping that Powell comes out with his nice purple tie and can help us, get pushed through this big level that's kind of looming here overhead. I thought the SPY was very interesting, the way that it rejected back down today. I wasn't really very surprised that it did that, considering that, people might be de-risking a little bit heading into this event. And I will say this, Mike, with the event being at 2 p.m. tomorrow, just be a little bit wary of trading in the morning. Sometimes we see the market go flat heading into these events. Sometimes we see some bigger moves as people try to maybe anticipate, which way the market's going to go off of that reaction. But it's going to be a huge one, Mike. I'm actually kind of voting for 50 basis points here. And it looks like, looking at the CME FedWatch tool, the market kind of agrees with me, at least as of now, right? Well, this will be flip-flopping quite a bit tomorrow, I'm sure. But as of now, at this very moment, or at least as the market closed today, there was a 63% chance of a 50 basis point rate cut, according to the CME, or according to the Fed Funds futures. So, Mike, it looks like the market's pricing in 50 basis points here today.
Absolutely. And then another thing to keep in mind for tomorrow is not only will the 2 o'clock time slot be important, but also 30 minutes after the fact at 2:30 p.m. Eastern time, because that's when the big man, Jerome Powell, is set to give his speech. And as we all know, when Jerome Powell speaks, you better listen, because he's definitely the most influential man in the entire stock market, and I would say, honestly, even the global economy, given the just the power he wields. So either way, look out for these time slots for tomorrow. And then as we look at, let's say, historical data when it comes to rate cuts, we could see that over the past 6 rate cut cycles, the stock market has positively reacted to rate cuts on average, but there is a lot of variance in between. So, we could see some years, let's say 1998, are really good, and that was a really good year for the stock market when there were rate cuts. But other years, like 2007 and even 2001, aren't as great. We'll say that. So basically, on average, the stock market likes rate cuts, but understand that it really just depends on the economy at the time. So you can't really I guess you could say, anchor on one side or the other.
Yeah, imagine just seeing the average at 5%. I'm sure a lot of people would be like, oh my gosh, that means it's time to go bullish now, right? Because it's positive. But at the end of the day, guys, it's very important to look at the data and understand that there's a little bit of volatility here. Obviously some years are much better, but it just seems like that maybe the green years over the past 6 cuts have been a little bit better than, or stronger, we'll say, than the moves to the downside. So I would say, Mike, honestly, though, I'm pretty split on it, especially on this one, and I think that there's a lot of uncertainty, like we talked about, and the market does not like uncertainty. Usually, if there's a big, if there's a big question looming overhead, once traders finally find out the answer to that question, you might see a big swing in either direction, because there's going to be a lot of people that are surprised, because, some people are saying 25, some people 50. There's kind of like that fight going on right now that is, going on between not just the bulls and the bears, but, the people trying to, I guess, predict what the market's going to do off of this decision.
Yes, and with that being said, let's look at some key levels on SPY and just, I guess you could say, the overall market right now, so we could best be prepared for tomorrow. So, Tom, the market broke all-time highs today, but it rejected pretty hard after making those highs. So what are the most important levels to watch for tomorrow in both directions?
Yeah, today there was quite a bit of rejections overhead, right around this 566.25 to 566.60 area. There was a lot of chop right around there today, so I'm going to really watch for a good breakout of that high. We're in uncharted territory now that the SPY was up at those highs, but as the day went and the SPY started to fall back under key support, now we have to watch 565 again as resistance, which was pretty big heading into today, which was the previous all-time high on the SPY. As far as support, 563 saw a lot of price action today. I'm going to be keeping my eyes on that, along with 561, 560, and then at 558 to the downside. A pretty major support under 558 would be 555 if the SPY were able to drop that much. But that's what I'm looking at for the SPY tomorrow. I think the big thing with SPY is going to be to really identify that key momentum after and during the Jerome Powell speech and the decision. So just keep that on the radar. You know, if we see a big swing and push past the all-time high, right around that 556.50 mark, then, you know, that'll kind of be the time to start to turn on the afterburners there.
Yeah, you got to follow the money. Like when we look at the heat map especially, looking at big tech stocks is especially useful because when you have big tech stocks like let's say Nvidia, Google, Microsoft, Meta, Amazon, Apple, and all these other ones, you know, they run the market quite literally due to how heavily weighted they are into the S&P 500. So by looking at what they're doing, not only does it show you like the direct influence they're having on the market as a whole, but they also have like trickle effects into like the market sentiment as a whole. For example, if we see big tech stocks ripping to the upside and putting a lot of pressure on their high of days, then that's a pretty good thing for the market, and it shows that, you know, like, you know, money is flowing to the bullish side and bulls are in control, and, you know, that's where the momentum and, you know, price action is currently, you know, focused on, and you probably don't want to fight against that. At the same time, if the news is bad that comes out and the market, you know, doesn't love what, let's say, Powell says or the decision that the Federal Reserve makes and everything starts flushing, you're probably not going to want to fight against that either. So it's more so about reacting to the, I guess you could say, the flows as they happen and realize what areas of the market are doing good and what areas of the market are doing bad. And that's why looking at a heat map like the one we show on TradingView all the time is especially beneficial, because you can see exactly what areas of the market are, I guess you could say, getting the most buying pressure and the most selling pressure. And again, this is pretty useful because, you know, sometimes we see, like, let's say certain areas of the market, like maybe bank stocks or, you know, value stocks or tech stocks or anything like that, react in one way while a different area of the market reacts in another way. So by looking at heat maps, you can see, you know, the flows from like a bird's eye view.
Yeah, it's pretty cool. I actually noticed today oil stocks, for example, did very well. They were up in the green. You know, a lot of the energy plays were doing fairly well today, while the value stocks weren't. You know, we saw KO, PG, Walmart, a lot of those stocks start to fall off. And, you know, healthcare wasn't looking the best either today, but tech was kind of mixed across the board, of course, but overall, you know, I really like looking at the heat maps during the day like that, Mike. They definitely shed a lot of light on the market as a whole like that. And of course, you know, the thing I really like about TradingViews is that whenever you have it set up the way that, you know, just like the standard way, I'll say the stock way, whenever you pick it up, these boxes are showing you how much influence each stock has, right? Like Apple is slightly larger than Nvidia right now, right? So it's showing that there's a slightly larger, more impact on the SPY there. Same with Microsoft, and you can tell Google, Meta, and etc. by the sizes of those blocks. But Mike, I know that tomorrow's just going to be a crazy day. Guys, let us know in the comments what you think the Federal Reserve is going to do. Are they going to cut interest rates? Are they going to end up cutting them by 25 or 50 basis points? Let us know. Give us your opinions down there. These are some of my favorite days to read the comments, Mike, because there's actually quite a bit of opinions associated with this event.
You know it. And then some other good news, Tom, is that tomorrow's earnings schedule is all clear, but we'll showcase it anyways. There are a handful of stocks set to report, like General Mills before open, but we have a clear schedule, so let's get right into some setups and predictions. A stock I'm watching very closely right now is Apple, and it is to the downside. I talked about this one in yesterday's video, and it's still definitely on my radar. This stock has been showing a lot of relative weakness over the past couple of weeks, and honestly the past couple of months. And while the market itself is actively pushing past its all-time highs, not only is Apple far away from its all-time highs, but it's getting further and further away from them. Warren Buffett also recently sold a lot of his Apple position, and Apple they're not doing bad. They just haven't been doing the best lately. And given the fact that they are a lot weaker, especially compared to other big tech stocks right now, in the event we do see a market sell-off, Apple will be like one of the first stocks I look to because of its weakness. So it's definitely on my bearish radar.
Yeah, mine too, Mike. 215 down there is a pretty big support. If we start to break under that the next couple days, I will definitely be watching Apple as well. With my first play, I'm looking at Tesla in the short term. Tesla's had a lot of wild movement, but it's been kind of stuck up here, and I think that it's kind of waiting for this interest rate decision, and I think traders are just kind of stuck right now, trying to decide exactly what the Federal Reserve is going to do here. Tomorrow, I really like the support at 226 on Tesla. If I see a good breakdown under 226, I will be looking for a downside opportunity. It's bounced quite a few times around there the past few days. Whenever it's moved below it, it's had a pretty good move, at least for the first few minutes. It started initially dropping down underneath that level. So I really just want to see a good 226 breakdown. If we do see a positive reaction tomorrow, I will watch Tesla up, but at the same time, I'll probably just be watching other stocks to the upside, honestly.
All right. Another stock I'm watching pretty closely is ExxonMobil, and it is to the upside. So ExxonMobil had a pretty nice move to the upside today as it popped up by like almost 1.5% with some pretty steady price action. There was some more increasing conflicts in the Middle East, we can say, and the energy sector as a whole benefited quite a bit from that, as when there are conflicts in the Middle East, oil prices can rise, and it could have a whole trickle effect onto the entire energy market worldwide. So ExxonMobil is already moving in a good price, in a way that has good price action, and it'll definitely be on my watch list for tomorrow for a potential continuation. So XOM is on my bullish radar.
Yeah, it was cool to see that good momentum this morning out of the energy sector, and I know that there wasn't a lot of good sectors to trade this morning. At least personally, I thought a lot of the price action right around market open was kind of boring and choppy and bland. I know the SPY made a new high, but in the process of doing so, chopped around a lot because people just could not make up their minds up here as the market is trying to digest everything going on. But with my next play, I'm looking at Meta, and with Meta here in the short term, I'm looking for a breakdown of 530. This is going to be a pretty major support in the short term, and there's also a pretty major resistance at 540 and then at 545, and I'll show this on the Bookmap right here. So pretty much from 540 to 545 on Meta, there is a ton of sellers stacked up. So for tomorrow, I'm going to really be watching that key 530 support that I mentioned. I don't really see too many buyers stacked up there on the Bookmap at the end of day today. Maybe that's a good sign, right? Maybe we'll see a lot of bearish pressure, and maybe we'll be able to break below that fairly easier. But I wanted to showcase this because from 540 to 545, there is a major resistance here. And if we fail to break that tomorrow, I think we could see a pretty good downside opportunity. But again, shout out to Bookmap for the X-ray vision here, right? You can definitely tell this is a great example of just the capability of Bookmap, right? Being able to show you those levels and all the buyers and sellers stacked up in the market there.
Yeah, and just looking at a couple key levels, like 540, you have 16,000 shares as a sell wall. 542, you have almost 13,000. 545, you have 28,000, and there's a lot more in between. So if you haven't used Bookmap already, now is actually the perfect day given the FOMC event for tomorrow. If you want to try it out, it'll be that first link in the description in the comments down below. If you do use that link, you will save. StockedUp viewers have like a special offers icon that appears. So if you want in, now's the time. It'll be that first link in the description in the comments down below. But besides that, Tom, let's jump right into today's momentum plays. And with the first one, we have JP Morgan to the downside.
Yeah, the banks, they're slowly but surely climbing higher. JP Morgan's at the 210 resistance. If they end up falling back below 208, then watch them back down.
All right, with the next one, we have NVIDIA, also to the downside.
Uh-oh, that one's going to make some people mad here, but there's a there's a huge support on NVIDIA here at 115, and I got to say this, Mike, the market made new all-time highs today, and I know it didn't end up at the highs, but NVIDIA didn't look too hot this morning either. They're right around that key support at 115. If we see a good break of 114.80, then watch them down.
All right, and then with the last one, we have TLT for both directions.
Yeah, I think that with the interest rate decision, TLT in both directions can be awesome, and it's also right around $100, which is pretty awesome too. So if we see a breakdown of $100.50, then watch TLT to the downside tomorrow. Of course, be careful of that $100 support, but of course, the meeting might be going on. We might see a lot of big momentum. If we do see a move to the upside with TLT and a break of 101.50, then go ahead and watch them to the upside as well.
Yeah, so with TLT, this is important because it's an ETF that follows longer-term interest rates, and whenever you have an FOMC interest rate decision, it has a big impact on assets like this one. So either way, definitely keep it on your radar. But for TLT, JP Morgan, and NVIDIA, they are on watch for potential momentum plays for tomorrow. If and only if they break through the levels Tom listed, we are looking for strong, powerful, consistent price action here. If these stocks do not break the levels listed, then do not force them. Again, we're looking for strong momentum. But besides that, we are all set for today's $792,000 big money trade, and we are looking at ticker symbol WMT, Walmart. So this is an interesting setup in the sense that Walmart has just been crushing it over the past year, and while that's awesome, they're getting a little bit overextended. Walmart is up 60% in 9 months. That's a lot for a company like Walmart. If we're talking about something like NVIDIA or something else, then you could justify it. But Walmart has it's getting a little bit overextended. Basically, the big money bought almost $800,000 worth of put options at the $82.50 strike price that expire on November 15th of 2024. What's interesting is that we are already starting to see some selling pressure come into this stock as it rejected pretty hard off the $81 resistance level. In the event Walmart gets back to that level, then that would definitely be a warning sign. It would be hard to justify holding a put position. But looking at Walmart and how it's already turning over, there are some key support levels coming up pretty closely right here. I was looking at a few at $78, $77.50, $77, and even at that like $76.30 area. But there are certainly a handful of levels. But either way, keep a close eye on Walmart going forward because when you have a big money play like this one, especially right ahead of an FOMC interest rate decision and when the stock is this overextended, it's definitely worth keeping on watch.
Yeah, this is actually one of my favorite big money plays in a while, Mike. I love the way that this is turning over here at this $80 resistance. Walmart is definitely overextended. I know some people are going to probably argue and say, "Oh, no, they're not." You know, we see a lot of comments out there for everything, right? But but at the end of the day, I mean, it really is, you know, especially for a stock like them that doesn't necessarily like to move, 60% in 9 months, Mike. That's insane to even say about a stock like Walmart, but it's just overextended, and I really like how they're coming in here after it started turning over, right? It's not like, oh yeah, hey, we're trying to front run call or puts as it's breaking out. No, we are actually seeing some real selling pressure, and throughout this whole entire recent uptrend, we have not seen one red candle that even resembles the candle that ended up posting today. So I think that there's definitely a little shift in momentum in the short term with this, and there's also a pretty good gap to fill on the chart as well.
Yeah, so definitely keep Walmart on watch going forward as the big money is getting pretty bearish on it. But I hope you guys are excited for an action-packed day in the market tomorrow. I think the fact that the market actually made new all-time highs today only adds to the volatility and excitement. And it's interesting because this is the first interest rate cut that we've seen, since March of 2020. It's the most uncertain FOMC interest rate decision on record. And we're already starting to see some interesting and exciting flows across the market. So I really hope you guys are excited. If you guys are new to the channel, consider obliterating that subscribe button to get our videos recommended recommended to you more often. We post brand new videos all the time and cover all the most important events, news, information, setups, charts, and historical data that you would have never otherwise seen, just like the seasonality chart that we showcased today with the average returns for each individual day with like almost 75 years worth of data. So consider obliterating the subscribe button to hear from us more often. But we also have to give a giant shout out to today's member of the day, NSC, in the Stocked Up Discord. They had a great post today with some Tesla and QQQ profits. So huge shout out to you, and keep up the great work going forward. You're coming up on almost a month now in the Stocked Up community. So keep on rolling, and hopefully we see many more screenshots like this one going forward. Besides that, thank you all so much for watching. And again, if you haven't already tried out Bookmap, definitely check it out. It's going to be that first link in the description, in the comments down below. Stocked Up viewers do save when you click on the link in the description. A special offers icon will appear, and that is what will show you the X-ray vision, just like we're seeing now. That shows you exactly where the key buy and sell orders are lined up, and this is very useful information. But besides that, thank you all so much for watching, and let's crush it in the market tomorrow.